So today we're talking about the things that the mentors, the gurus don't tell you. They don't hide it per se, not always, but they just don't tell you, right? And there are some common beliefs, also like misconceptions about the forex market. Not to say gurus per se, but yeah, I think you get the gist of it. Right? So first off, is that every strategy works, right? So even if your mentor is telling you that only their strategy works, only their strategy is going to be guaranteed that it will work, then that's a lie, because all the strategies work. And I've seen it, I've tried it, I've traded, I don't know how many times I've tried many strategies. All the strategies work, but they just have their own certain conditions that have to be met first before you find an entry. So every strategy works. It's just that some of the strategies, maybe you get more entries, some of them you get less entries. And even if your mentor tells you that 90 something pays, their strategy is 98%, profitable or something like that, it doesn't really matter. And I'm going to mention it down below in the next reason below. If a strategy is 99%, so like if it works 99% of the times, it doesn't necessarily mean that you're going to be profitable at the end of the day, right? How many of you have been trading for a while and you know that maybe in a single day, right, you maybe winning, you won 9 times, right, and one trade took it all, right? So a 99 winning rate strategy, it might be just, let's say maybe I might win 99 times aiming a dollar, and when I lose $100. And so that strategy, yes, it's 99% profitable, but is it worth it in the long run? Because if it doesn't accommodate risk-reward ratio, then it's not really worth it, right? So when you're looking for strategies, find out about what like the risk-reward ratio at least, right? And that is going to help you in the long run. Don't just look for a 99% perfect strategy, because yes, there might be a strategy that's 99% perfect, unless it's 100%, of which I'm pretty sure it doesn't. There isn't a strategy like that. Even the 90%, most of the times, that's usually a lie, because there's no strategy that's 90% perfect. So be prepared to lose, because it's not guaranteed that you're going to make money. Rather, I can guarantee you that you're going to lose money from time to time from the market. The third thing is that normally, like I said, normally, it's not for everyone. It takes time for you to be profitable. It takes a lot of patience, it takes a lot of practice until you know what you're supposed to do, when you're supposed to do, what to avoid, right? It takes time, especially if you don't have a mentor or someone who can guide you, right? It will take time for you to be profitable, right? It differs from person to person, right? How fast you make mistakes, how faster you can learn from your mistakes. That's why I recommend journaling your trades, recording your trades, and not just journaling them, right? After a day, a week, right? So come back, a month, come back and see, record everything, or which lot size you used, how big was the account. You can use Notion for this, by the way. Add a screenshot of the end, where you entered, where you exited, where you got stopped out, where you made profit, everything. Record everything, and after a month or two or whatever, a week, come and back test, analyze and see what we're doing wrong on this trade, what did I do wrong, and be able to learn from your mistakes. That's how you can actually become you can become profitable a little bit faster, how you can aid your growth, right? I got to know this late, of course, and yeah, it took me a while. That's all I can say. Then the fourth thing is that flipping accounts, $100 to 5,000 in a day, or yeah, stuff like that. It just simply means you are risking more. It's likely that that account can blow, right? If I show you that I've made $10 to, I've grown $10 to 200, $10 to 500, right? It just worked that one time, right? It doesn't mean that I do that every day, each and every day, right? There are times that I also lose, right? Though this can be beneficial, because you are risking less and targeting more, but don't believe that that person does that each and every day. They don't do that every day. It just worked that one time, they recorded it, and that's why they're showing you the results. Otherwise, if you ask how many times they tried it before, they might have lost 10 times, 20 times. They've lost 10 or 20 $10 accounts, which amounts to almost 200, and then they just flip it to maybe to 300, 500. Maybe someone has just recovered money that they've lost while trying to do that. and it's not replicable over time, so it doesn't necessarily mean that that person is very profitable. Then the fifth thing is that there is no holy grail, right? When you say holy grail, so you're saying that there's no strategy that's 100% perfect, right? So always risk wise, right? Always apply risk to reward ratio, because it's not guaranteed that you're going to win money each and every trade that you take you're going to win. It's not guaranteed. It's not like a certainty. There are sometimes that are going to lose, even if you're, I don't know which strategy you're using, but there's no strategy that's 100% perfect. Even if you're using the SMC or ICT, you guys think that, okay, never mind. You guys think that you know the market in and out, but you can never anticipate what the market is going to do. So there's no strategy that's 100% perfect, 100% bulletproof. So that 1% chance, 10% chance that you might lose money, always be prepared for it. Hence, apply risk to reward ratio, good risk to reward ratio for that matter, not just any risk to reward ratio. Because risk to reward ratio, obviously, you're using risk to reward ratio. Maybe you are risking 100% of your account to gain 10% of your account. That's risk to reward ratio. Though it's poor, but it's still risk to reward ratio. The sixth thing is that, this point is controversial. Should I say controversial? But it's two ways, it's two ends, right? It doesn't mean that if you're not, if you don't have a mentor, you're not going to be profitable. Yes, for me, I didn't have a mentor for a longer period of time. But you can always become profitable even if you don't have a mentor. But if they say that you are not going to become profitable, that's a lie. But you can actually speed up the learning curve if you've got a mentor. So that's a bonus point. So advantage also. Then the seventh thing is that if someone shows you they're showing you previous trades, so they're back testing and showing you that their strategy that they want to sell you probably works, then it's different. Actually, back testing is different from actually trading live from that moment, right? There are a lot of, if you're back testing, you can find countless opportunities that you could have had to enter, but when you're trading live and you're trading at that instant, it's hard to make the decision. It's hard to make the call. Should I enter or should I not? Right? Because it's in real time. It's difficult to find an entry. You might not see an opportunity now, but if you come back after an hour or two, after it has already played out, everything will be making sense. That's why it's not. Backtesting doesn't necessarily mean that strategy works, right? That's why I advise you to try this strategy live, even if it's on demo, right? Try the strategy live, and then you can see if it really works or not. The 8th point, though no mentor even says this, but I just wanted to say it anyways because it's my video, so I get the market does it what it wants. The market is it does what it wants, when it wants, where it wants, with whoever it wants for that matter, right? So you can never predetermine that the market is going to move here and bounce off this EMA, come down, make a retest of this zone flip, continue going down, then create a W over here. There's no one that can anticipate that. If someone is telling you that they can, their strategy anticipates or even controls the market for that matter, then that's a lie and probably a scam too, because there's no chance of that happening, right? Then the last thing that maybe you don't know about mentors is that not all their money comes from forex trading. Of course, if I make 2,000, which is not bad per se, but they just don't mention it, right? If I make maybe 5,000, 2,000, and these are hypothetical, I don't make that much money. I'm not saying that I make that much money, right? If maybe someone makes $5,000 from the market, right? They can make even 5,000 more from maybe offering signals, mentorship, whatever, right? So not all their money is from forex trading. Maybe there's other money that comes from mentorship, affiliate, partnership, program, I don't even know, seminars, whatever it is, but it's not, which I also recommend. You shouldn't always rely just on the forex. If you have got the chance to do a project or anything for that matter, do it, because you can't rely on one thing alone, because it's not guaranteed that it will work out each and every time, right? Though I'm not saying scam people or anything or offer mentorship, I'm saying even if you offer, if you have got physical project that you do, then actually do it. I recommend you to keep on doing those projects.